Welcome. In this analysis, we will examine the framework for financial control within an organization. Our focus will be entirely on the principles of financial policies, as detailed in the source material, to understand how they are structured to ensure both integrity and operational efficiency. Our review is structured into 4 distinct sections. We'll begin by defining financial policies. Then we will analyze their core components and the associated compliance obligations. Following that, we will detail the policy development process itself, and finally, we'll review policies in practice through several case studies. Let's commence with Section 1. This section establishes the foundation by defining precisely what financial policies are and why they are so fundamental to an organization's integrity. According to the source material, financial policies are defined as the clear rules and guidelines an organization establishes to manage its finances. The stated objective is to ensure all financial matters are handled with consistency and fairness throughout the entire organization. This definition naturally leads to a crucial question. What is the primary purpose these policies are designed to serve? The source document outlines 4 key objectives. Firstly, the policies exist to ensure compliance with regulations from governing bodies, specifically citing the Australian Taxation Office, or ATO, and the Australian Securities and Investments Commission, ASIC. Secondly, they promote accountability by clearly defining responsibilities, which helps prevent errors and fraud. Thirdly, they support decision-making by providing a structured, reliable framework. And finally, they improve overall financial management, which includes everything from budgeting and forecasting to day-to-day expense handling. Moving on to Section 2. Here we'll examine the specific building blocks of a financial policy and delve deeper into the critical area of compliance. The source identifies 6 core components that constitute a comprehensive financial policy. These are clear guidelines for budgeting, strict controls on spending, standards for financial reporting, protocols for cash management, documented compliance procedures, and a formal strategy for risk management. To provide a specific example, the source material explicitly references the Australian Accounting Standards Board, the ASB. It is presented as a key compliance requirement, setting the mandatory standards for all financial reporting in Australia. Let's be very clear on this point. Compliance is non-negotiable. It is a mandatory requirement for any organization seeking to operate legally and maintain its financial integrity. The source document underscores the legal consequences of non-compliance. It states, quote, "In Australia, laws like the Corporations Act 2001 require companies to follow strict financial guidelines. Breaking these laws can lead to penalties or even criminal charges. This highlights the significant legal and financial risks involved." We now proceed to Section 3. In this part, we will review the structured step-by-step process for creating and implementing effective financial policies as laid out in the source document. It's important to note that policy development is not an ad hoc activity. The source specifies a formal 7-step process, which is designed to ensure the resulting policies are both robust in their controls and practical in their application. The process detailed in the source consists of 7 distinct stages. Step 1 is to identify objectives, defining exactly what the policy is meant to achieve. Step 2 is to engage stakeholders, involving key personnel to ensure the policy is workable. Step 3 involves a formal risk assessment to identify and mitigate financial threats. Step 4 is to draft the policies using clear and unambiguous language. Step 5 is the review and revise stage, where feedback is gathered to refine the draft. Step 6 is approval and communication, which involves getting official sign-off and distributing the policy to all employees. And the final stage, Step 7, is to monitor and update the policies on a regular basis, ensuring they remain relevant and effective. In our final section, we shift from the theoretical framework to practical application, examining how these policies function in real-world scenarios. To illustrate these principles, the source provides 3 case studies of Australian organizations. Each case demonstrates how the implementation of specific financial policies was used to overcome a significant operational challenge. Let's review the table. The first case is a small retail business facing a cash flow management challenge. The policy implemented involved tighter expense controls and inventory management. The outcome was improved cash flow and profitability. The second case is a nonprofit organization that was experiencing persistent budget overruns. The solution was a policy requiring detailed budgeting and monthly financial reports, which resulted in the organization staying within budget and increasing its funding. The final case study is a tech startup that needed to attract investors. By implementing policies that ensured accurate financial reporting and forecasting, the company was able to conduct successful funding rounds. In summary, the evidence presented in the source material demonstrates that a framework of well-defined financial policies is not merely an administrative exercise. It is, in fact, an essential apparatus for ensuring compliance, enforcing accountability, and enabling strategic financial management. We will conclude with a question for your own reflection, based on the principles we've discussed. How effectively do your organization's current policies balance the requirement for robust financial control against the practical need for operational efficiency? Achieving that balance is critical.